All right. Hey, welcome to the Go for CEO channel, everyone. Hey, look, welcome back to just another episode of value. All right. And actually, since we've done CEOs, founders, entrepreneurs, and intrapreneurs, I actually have an intrapreneur here with me inside the Go for CEO studios. Excited to have someone live 2021, March 2nd. And he's an intrapreneur that has blown up the real estate world. And just with his knowledge, his value, we actually met on an app a few weeks ago called Clubhouse, and now he's in the Chicagoland area. He's graced us with his presence, and really just someone who's starting to become a friend and someone that we're going to look to do business with. But I'm going to do a little bit different Go for CEO channel update today. I hope that you'll enjoy it because it's going to be about real estate, about mindset, about family, and some of the things that Shane has been able to do. So Shane, I won't butcher the last name. It's Shane. What's the last name?
So my full name is Shane Lihai Tulangamangale, and there's all kinds of cultural aspects to that, but we're from a village, Mapasanga, Falinu, that side of the island. Those are some of the villages that my grandfather had jurisdiction over, and that's where my father came, and he met my mother in Hawaii when they were going to college, and she was kind of this crazy hippie Viking lady that would take a chance on marrying kind of a crazy Samoan guy. Back in the 70s, you got to date that and know how that was a little bit, more of a rare occurrence back then. So
I love it. Well, hey, I'm a 70s baby, so that it's relatable. I'm 1975. So.
And your parents are from where?
Ecuador. Well, my adoptive father is Ecuadorian, but my real blood mother is from Colombia, right. South America, and my real blood father it was from Puerto Rico. So I'm Puerto Rican and Colombian. So kind of.
And I don't know if they have bad blood. I know Puerto Ricans and Mexicans don't always get along, but.
Yeah. Not Puerto Ricans and Colombians, but yeah, definitely Puerto Ricans and Mexicans. Sometimes they have a little bit of that fight, but I think all of Latin America, my mom was very, God rest her soul, was very much prideful of being Colombian. Right. And the funny thing is she would always say, I would always be like, Mom, I was born in America. I'm American. And she's like, well, hold on a second, son. You're North American. I'm South American.
That's right.
So she would always correct me. I spent a couple
years in South America, and they always correct us. But they say Americano, but then they also say that they're American. So they're on both sides.
Double dipping.
That's right. Yeah. And technically, I'm Afakasi, so like Jason Momoa and The Rock, I don't work out in the gym as much as those guys, and Corona's been not as good to me, but I'm half caste. So, mom has English and European blood, dad has American Samoan blood, and so technically I'm Afakasi.
That's awesome. That's awesome. Well, look, thanks for coming on to the Go for CEO channel. I think a little bit different of
Thanks for having me.
No, I appreciate it. A little bit different of a show today. I think everybody will enjoy it because, as I just said, we are coming off of Corona. We're coming off of this time period where we've kind of been secluded. We're having a live, video today, but we met on an app. We met on an app called Clubhouse, and I don't want to promote the heck out of Clubhouse because this is my channel with Go for CEO channel, but we're bringing on people like yourself that are just doing some crazy good stuff. You're in the Chicagoland area, you give me a buzz, we start talking, we're like, hey, why don't we do a recording? You stop by the office. It's like 9:30 at night on a Tuesday night.
That's right.
And you know what? What I'm going to deem this show is about being a winner and about having the right mindset. So tell us a little bit about your background. Obviously, you told us a little bit about that Samoan kind of European background, but tell us about you, your background, and what are you doing nowadays?
Well, it's an interesting world. I've had some personal life changes and I'm just trying to adapt and reconfigure things, but Corona has added its own little flavor to it. But, my situation kind of grew over the last several years. We talked about intrapreneurs. So I was inside a couple books of business where I was allowed to do my thing and then kind of also take a W-2 salary. That was one of the connections actually for John and I, because he's been an entrepreneur as well before. So you've got to kind of toe the corporate line or the business agenda, and then you've got to toe the entrepreneurial line. And, I think guys like Google and we don't make that kind of money. I don't think you or I do, but they were really clear in identifying a long time ago really good talent that would have these great ideas, and they would go off and become the next Pinterest or something like that. And they were like, why we don't lose that talent? So they would kind of marry that fine line. And I think John and I connected on that, where I was in a situation where, they wanted to keep my talent, but I wanted to also have my own entrepreneurial endeavors. So that worked out well for the last several years. And what I was doing in there was developing a clientele of people that wanted guidance and consulting in the realm of real estate investing, single family real estate investing. So, and it was funny because the management aspect of that was also kind of hyper. It was bringing me up to speed with, what could be done in property management. I'd done some property management stuff in my own world pre the global financial crisis, right? Which, but things have changed, technology's changed and things have changed. And so there are a lot of ways and a lot of new things that I had to learn in the property management space. And then how could I adapt that to be meaningful to my clients? But at the end of the day, the block and tackling of real estate investing, the math, the integrity, understanding the market, understanding a good deal, kind of getting the lay of the land and getting a street fill or field fill for what's going on. That part didn't change. So I was really good at that. And whether it was a situation where people wanted to use my expertise or whether it was a situation where they're too busy with their daytime jobs, it just evolved into a platform where I could solve their problems. Sometimes I tell people all the time that sometimes Alfred isn't just any butler, he's Batman's butler, right? So some of my tier ones, they don't have time. Their daytime jobs, they're well paid, they're well compensated, they're focused on that, but they believe in real estate as a solid investment vehicle and they want to see it perform. So whether it was asset selection or just kind of helping them reorganize their monopoly board, that's what it was about. And it just kind of grew into more and more. And now it's taken me into bigger things and better things. And with Corona, we're kind of paused, but we're doing a lot of research right now and we're going to come out of it, I think, guns blazing.
I love it. And when you approached me off of Clubhouse and we started talking, right, and about those synergies, about those energies already today, I've made an introduction to one of my connections, right, with real estate, one of the bigger guys here in the Chicagoland area. You came out, you just met some of my partners on the financial side.
And I texted John last night. I was on an interesting stage of a lot of big commercial players, and I thought he should just chime in and kind of listen, because I think there's some guys that trickle down into a space where he could be effective as far as his contacts and here in Chicago. And he's got. I was very impressed with his diverse knowledge over different industries. And so I think that'll go well.
Yeah, I mean, look, and here's the beauty of it is that you start to connect the dots with people. And I know people that are 2 levels away from where you want to be. You may know someone 1 level away from where I need to be. Mm-hmm. And all of a sudden we create great synergies, right? That's right. So that's awesome. So tell us a little bit about now, kind of you did the entrepreneur side of things. You start to explore some of those things that you've learned throughout the years. What are you doing now? Because today, I mean, you were like from Iowa, Davenport to Lombard, Illinois, to now you're in Oak Brook right now. I mean, what's going on?
So
what are you looking at?
I'm still a gun for hire at the end of the day. So if someone has a real estate problem, a lot of times if it's depending on what it needs, my fees can range from several hundred to several $1,000s. If I'm going to be a more active participant, the compensation needs to go up, or in most cases, I just like to take an equity position and be the guy that kind of solves the problems and brings the most experience to the table. And, I think one of the things that's been interesting through this Corona situation is I've found myself in Colorado, and we have an asset there the family's had for over 50 years. And, the back end of that asset has been this back and forth place where my grandma passed away a couple of years ago. But over the years, she's lived there on and off. She's had a house and then come back and then had a bigger house and a smaller house. But there's this little cottage back there that my kids call Gigi's because it's their Gigi. And as I've hung out there and looked in the wall of all the pictures and things that, my family, my uncles, my grandparents, and there's even pictures of their great grandparents that I've never met, right? And then I just kind of sat there and I thought, I need to make a pivot. And this is even pre-Corona, and Corona's only accelerated that pivot. And it was just kind of going back to everyday landlord strategies, but putting an investor twist on it, bringing some technology to it, bringing some real-time information. I think one of the big things that my grandfather, if he was still alive, would be open to is investing out of state. My father started taking landlord principles that he learned with my grandfather, who was actually his father-in-law. And he started applying some stuff he started doing back in American Samoa. It was interesting, and he made some cultural adaptations and he did some things back there. And I think that's what I've been trying to do, is trying to figure out how to scale down information so that it works for the everyday investor and the everyday landlord, but still gives me the ability to help and give them a good outcome without being bogged down in all their problems. So it's been an interesting pivot. I think Clubhouse has been a big part of that. So we'll see how that all goes. It'll be interesting.
Well, yeah, I mean, it's dynamic with the way that you could kind of pivot, start to change some things. So tell us a little bit about, take the tier 1 that you've explained and tier 2 type of clients that you look for. And then what is it specifically that they can really ensure that you're going to do as kind of their I guess, guidance, right? And their mentor in what you're doing, and obviously their advisor in that situation.
There's been some hiccups in the last couple of years in lots of different ways, but for the most part, nobody's lost any money. That's the good news. The problem is sometimes that the performance doesn't always meet, the expectation. Oftentimes what happens in real estate is somebody runs to the new hot thing. And I've been there. I've been ahead of the curve. I've been behind the curve over the years. And you make really good money. And then the next guy at the country club, or the next guy at the workplace, or the next guy with the water cooler hears about what this guy just did.
Yeah.
And then he wants to get in, but he's sometimes 6 months to 2 years too late, right? And so the first thing is helping them identify where they're at and understanding that, if they missed kind of the gold rush, what's left of the gold, of the gold mining operations that are out there. But at the end of the day, real estate's a long game. You can play it, you can condense it. I oftentimes tell people that, we were talking earlier, and I was telling them, one of the things I started out with a long time ago with my clients, when I was in the business of the global financial crisis. It crushed me. It hurt my best friend, hurt one of my closest people in my office that I stood in their wedding, and we all lost everything. But our clients who had better leverage and better equity, they came out of it just fine. So we were young and we were a little more aggressive. But if you looked at my mom, my grandma, if you look at some of my other clients, they didn't have a problem because they had all the fundamentals down, and equity over a long period of time had just protected them and buffered them from the downturn of the financial crisis. In fact, their cash flows went up during that time. And so I was telling John earlier about FIRE for us has always been a kind of a universal thing. Like, what's your FIRE to get things started? And we use FIRE as what is your financial position, right? What are your investment goals? What is your risk tolerance? What is your experience and your education level? And the biggest easy example of that is a kid that's growing up under a general contractor is going to walk into a house and see all the potential, no matter how much of a money pit it looks like. And a guy that's just growing up with numbers his whole life is going to walk into a house and just see problems. And so those are two totally different experience levels. So this guy should be focusing on the finance perspective of how to do, houses that are ready to go, or just budgeting extra money for a contractor. And this guy might be more than willing to take on a project and manage it himself and save money so that he can get, his first piece or his third piece on his Monopoly board and accelerate his path. So I think that, I think that along the way, we've just found a way to figure out how to meet the needs of different people. A tier 1 person for us is $2 to $20 million, $200,000 to $400,000 a year. And they either don't want to manage their Monopoly board, or they want to make sure that they're doing everything right. A tier 2, oftentimes in my case, there are a lot of landlords that just kind of they're going into a new market. They want secondary, they want to bounce some ideas off somebody that has more experience or has done things at a greater scale. And, they could be $1 to $4 million, and they might be $80,000 to $200,000 in household income. But for whatever reason, for me, a lot of my tier 2s have, at least 50, 60, 70% of their income piece is actually passive cash flow. So those are kind of the two spaces. And then tier 3s are just everybody else that's either been referred in. And we're doing some interesting things right now with the tier 3 space. So.
And you know what? You mentioned the word FIRE. That wasn't just because of all the awesome wisdom you're dropping right now. Yeah. There was financial.
Yeah. Your financial position, your investment goals, right?
Then
your risk tolerance.
And
your E's are what are your experience and your education levels.
Sweet. So that's FIRE, right?
Yep.
What a great acronym, everybody. Go for CEO community. If you just rewind it, I'll get a little, kind of a, whatever it's called.
Yeah.
A little
put a little FIRE background.
Editing called FIRE, man. What an incredible acronym right there that you called FIRE. So let's go ahead and kind of wrap up this great impromptu video. And thank you so much, Shane, for coming out. And I hope that everybody at the Go for CEO community enjoys this kind of just impromptu, quick, educational type of video. What other things do you think are you seeing over the next 6, 12, 18 months now that we've kind of started to get out of Corona? You've kind of recalibrated some things from Intrapreneur to now going back out on your own with some of the family funds and contacts and clients that you have. What are you seeing 6, 12, 18 months from now?
So, I've been brought up to some bigger stages in this app called Clubhouse. It's a new social app, and there's a lot of amazing information out there. And like anything, there's some information you got to be careful of. But, I was on a space the other day where probably there might have been 1 billion square feet in that, on that stage. This was Texas and New York and LA. And one of the big things that I was brought up there for was to kind of give a little bit of insight into the single family world and some of the concerns there. And one of the warnings I've thrown out there is that the CC plus space in our world is got a lot of problems. I was an operator over several hundred doors, then a couple thousand doors. I connected with other operators around the Great Lakes that had equal sized portfolios. So I'm always a dozen and a half phone calls away from calling different guys and saying, what are you seeing in your portfolios that concerns you, or how's this performing? And so one of the big things is that CC plus category. You got a lot of people that have been propped up by just having, Corona funds and unemployment funds. And we're going to just now see in the next 6 to 9 months how well they're really going to fare. Did they create bad spending habits where they just propped up by the government? Are they really going to be able to get back out there and pay their rent in their individual areas demographically? Are there things that are hurting them worse than other parts of the country? And I think one of the other things to be aware of is there are a lot of markets that were on the verge of correction. They were going to have correction, market correction, natural market correction, and it was healthy and it was good. And then we went and we took interest rates and we dropped them so low. So all of a sudden, someone in Colorado that could buy 400,000, someone in Chicago that could buy 250, they're able to buy 450, 500. They're able to buy 250, 300,000. So we really didn't see the properties become worth more than they were pre-Corona. We just saw the person that was always getting qualified by payment have the ability to go buy more property. Well, what people need to realize in the backdrop of all this, from a socioeconomic and a macroeconomic situation, socioeconomically, that person just bought more than they probably should have. They're not going to be in a position to get those same kind of rates somewhere down the line. Do they actually have the spending habits that justify having that loan? That's its own little problem. The bigger issue is now we had a correction that we needed to have. Okay, so different neighborhoods needed to take anywhere from a 3, 4, 5 to anywhere from a 10, 15% haircut and value, reset, and then go back up again, right? That's just the natural course of real estate. Instead of that happening, in some cases, we got 10, 12, 13, 14%, of appreciation, just because all of a sudden a guy that could only buy $400,000 yesterday could buy $500,000 today because of great interest rates, right? And he's buying it and he's doing it. He's getting into a bidding war. Well, what you've done is you've created a bubble there. And in different parts of the country, it's going to create a different situation. I've identified several cities along with some colleagues as what we call global cities, up and coming global cities in America. And I think they'll be in a better position to hedge out that bubble. Places like Denver have really sound economics. They're going to see a downturn, but they'll go right back up. Seattle, Atlanta, these are going to be places, Phoenix, Dallas. They're going to be in the long haul, 10 years are going to be good. But some other places in the Midwest that have just started to see things recover, they're going to have a big problem. So in my industry, and even socioeconomically for the individual, on a macroeconomic level, for anybody who's listening, this is going to be a problem, because real estate is a monster in the world of how we calculate our economy and how we do things, right? Our last real estate tailspin it created the global financial crisis, right? We were affecting funds in Europe and Iceland and everywhere else. So navigating that is going to be the trickiest thing in the next 6 to 9 months. I feel like I've got, and especially with Clubhouse, even more so now, I feel like I've got my ears to the ground. I feel like I'm trying to maintain this connection between Wall Street and Main Street that is realistic. And I think that we kind of know where to hedge in and make value plays. We've been focusing on I've been really keeping track of 25 different markets. We're going to be active in 11. We're in 7, 4 states between family and clients. And so that's been my thing, popping around, checking out these different markets, sometimes for a client, sometimes just because I'm curious about what's going on. I'll hear something about it. And if it fits certain criteria, then, I'm really about, you get the right deal, but more importantly, you get the right market at the right time, because you could have bought anything in a hot neighborhood in Chicago or Denver at a deal that wasn't very good at the time. But if you just held on to it for the right 5 or right 10 years, we call that the run. I teach my people that's called the equity run. Then you're doing good, and if you miss that run, then you miss the appreciation. So the cash flow better be there,
I love it. So, you kind of touched on something that I know back 10, 15 years ago was called Nina.
Yeah.
No income, no assets.
Yeah. They had the Nina loans, the Ninja loans, the double stated loans, right? You could they used to say if you could fog a mirror, you could get a loan, right?
Yeah.
And that was the unhealthy part of it. But we saw some really good products that were sustainable. I always teach all my people, and I remind a lot of other people to go back and watch The Big Short. That movie with, if you're a lady and you're watching this, you got a lot of eye candy in there. You got Brad Pitt and Ryan Gosling and, Steve Carell, and you've got all these good actors. But I think it was a passion project for all of them, because it was just, they wanted to inform the American people on how blindsided Wall Street was, how disconnected they were from Main Street, and what had really happened, to just the travesty of so many of these Americans losing their homes. Some of them, they should have never had them to begin with in the first place, and that was the industry's fault. Some of them were, there was a domino effect, and they were the collateral damage. When you have 7 neighbors that had a house they shouldn't have, and you can't sell your house, and you, for whatever reason, your life circumstance demands that you do it, and you're just stuck upside down, you're in a bad place. So those are the things that, Corona, we've done a lot of things to correct that as a country and as a market, but we haven't done everything we're supposed to. So Corona will bring some of that out. It'll be interesting to see how that all happens.
I love it. I love it. Well, hey, Go for CEO channel. This is it. We're wrapping up, and thank you so much. So Shane, thanks so much for coming by.
Let me say one thing.
Yeah.
Which is part of the reason that I wanted to do this in person, is because mana is a big thing for us in our culture, right? Your energy, your spirit. And I could feel it over the phone when I was talking to John. I could feel it here in person. So I wanted to make sure that the energy over the phone, which is car salesman energy for all of us, whether it's me or him, matched up with the energy in person. And when I'm here, I feel good things. It feels great. My dad taught me a lot of great cultural things that just have carried on with me in my day-to-day business. And he said, don't be afraid, son, to look a man in the eyes and just see if they're going to pan out or what's going to go on. And I mean, he was really teaching us how to fight when he said that, but it applied to business, and he taught us how to do that later on. So you get the mana off someone, you get the energy, you want to see what's going on. And John has great energy. We're excited to collaborate on some other things. Some of my guys are going to watch us, and we're going to bring them into the picture. So, yeah, looking forward to good things, and we're just glad to be here in Chicago and hanging out and making a new friend and meeting him in person and going from there.
Well, you're going to want this guy on your poker table, man. This guy would look at you in the face, and you might have to fold him just seeing the hand that he's holding. So, hey, like I was going to say, you kind of stole the words out of my mouth. I appreciate you giving that last kind of direction, and I feel the same way too. I think there's a lot of collaboration. I've got 3 kids, you've got your kids, there is some maneuvering. We're here at night on a Tuesday night, but we're about passion. We're about serving, people. We're about educating people. And this is a little bit of a twist on the Go for CEO channel, but I hope to bring you different twists like that so that you can enjoy the channel. And look, leave a comment for Shane. I'll let him know when we post this, and I'm sure he'll be able to collaborate, and we'll put some of his direct info that if you are interested in that tier 1, tier 2, or tier 3 type of investing, he's the man to go to. So thanks so much, Shane, for coming on board.
Thanks, Sean, for having me.
By the way, subscribe to the channel, leave a comment, smash the like button, and hey, we'll see you on the next round. Thanks so